What is up, you guys? My name is Andrew and this is Wanna Crypto, your guide in the world of cryptocurrencies. Don't forget to like and subscribe for more difficult cryptocurrency terms made easy. We continue to plunge into the crypto, and today we have crypto exchanges. I'll try to tell you about basics that will give a general picture of what crypto exchanges are and what you can do on them. The term crypto exchange is not considered an established one, so you can also hear such terms as digital currency exchange, digital currency trading organizer, trade service, electronic exchange platform, etc. But let's agree to use crypto exchange from now on to make things a bit less confusing. I will immediately draw special attention to the fact that most of the existing crypto exchanges don't have an official exchange registration and license. Transactions with cryptocurrencies made on crypto exchange don't fall under the exchange laws of most countries. Most crypto instruments work outside the jurisdiction of Western countries, avoiding the supervision of financial and law enforcement agencies. Due to these legislative circumstances, the Ministries of Finance usually rule that operations on crypto exchanges carry significant legal, technological and market risks. I don't try to intimidate, I just warn that almost anything can happen and no insurance is given out there. But as a rule, everything goes smooth. Due to the high volatility of the cryptocurrency, most people use them for speculation on various exchanges. In 2013, the Bitcoin rate rose by 5,580%, which is no way comparable to the 30% return on the stock market. Crypto exchanges only look simple, at first glance. Without a baggage of knowledge, experience and a bit of intuition, you are more likely to simply give someone your money and even not understand why this happened. The exchanges can be conditionally divided into two types: those on which bitcoins and some basic forks can be exchanged for fiat money. Usually these are the largest stock exchanges, and those where the exchange is possible only through Bitcoin. Some forks can only be traded on certain exchanges. By the way, getting on the stock exchange is not an easy task for a coin. When you create a new fork, you add it to the stock exchange using a vote that is created in the exchange's blocks or on forums like Reddit or Bitcoin Talk. The basic principles of conducting trades and speculation in the market of cryptocurrencies and in the stock market are similar: buy low, sell high. Therefore, in order to achieve some success in this area, you need to first learn the basics of trading in the stock market. If you go to the site of many exchanges, you will see several main components: chart, buy orders, sell orders, history of transactions, and probably the volume of trading, but it's not always there. The chart on the exchanges shows the change in the price for the cryptocurrency in the course of time. In fact, the graph is a graphical representation of the spread. Spread is the difference between the best prices of the sell orders asked and the purchase bid at the same time. Usually, the chart itself is presented in the form of Japanese candles. Orders. This table shows the closest sellers and buyers. Here only the bids for purchase or sale are indicated, which can work if someone decides to buy or sell at such a price. The table is divided into three columns: the price at which you are ready to buy or sell, the sum of all the number of cryptocurrencies that people are ready to buy or sell at this price, and the amount in rubles dollars is equal to the number of sold or bought coins at this price. The volume of trades is a certain number expressed in dollars or stocks, reflecting the value of transactions made for a specific time interval. Analysis of information on trade volumes diverges in three areas: analysis of vertical, horizontal volume, as well as a cluster analysis. On the crypto exchange, only vertical volume is used in the main. The main work that needs to be done to anticipate the movement of the exchange rate on the stock market is to keep track of the news on the traded commodity, the reputation of the companies. If these are shares, the actions of these companies, the incidents that happen with companies all affect the value of their shares. There are not a lot of news about cryptocurrencies, and for some cryptocurrencies there is almost no news. To raise the rate of a certain coin, if its capitalization is small, a group of people can agree to invest a relatively large amount in this coin to attract the attention of other traders and force them to buy this coin at a high price. Naturally, such manipulations are not published in advance, and you would have a little time to buy for a still rising price. Some popular companies can cause a rise in prices for a certain coin, for example, by announcing the acceptance it as a payment or approval from the state. Such news should be followed closely to react as soon as possible after their publication. Usually, such events are covered on thematic sites about cryptocurrencies. This is only a top of the iceberg. Later we will deal with the terminology and organize a short tour to the stock exchange themselves, where we will see how all this works in practice. In the meantime, thanks for watching. I really want to see your criticisms and discussions in the comments, and we'll see you in the next video. Peace!